because of countries like China and Russia being so involved in Bitcoin mining and also Bitcoin in general, his position that this is very dangerous for the U.S. government to even allow. What are your thoughts?
I mean, I think a lot of people were against the automobile and electricity when it came out. Bitcoin is 21st century financial technology. It's $1 billion block of energy, manifested as sunlight. You can move it at the speed of light. You can program it. If you want to build a 21st century economy, you're going to need to embrace technology. It's not at all a bad thing for America to lead in the financial technology segment in the 21st century. And so dismissing Bitcoin is kind of like just dismissing any new technology. I mean, you could say the same thing about the internet. People get worried about new technologies, and I mean, there are people that thought that pagers were tools of criminals, right? And then there were mobile phones might be used for something, and I think in this particular case, you have the ability to put a block of $1 billion on a computer and do 1 million transactions a second and move at the speed of light. And that means that you can revolutionize the banking industry. You can revolutionize the savings account. You can create much more efficient counterparty transactions in the finance sector. Like the way I get loans right now is I fill out a personal financial statement. My accountant at 20 years gives it to my banker at 15 years, 3 months after the end of the year on paper, and they submit it. And on the basis of that, the bank decides whether to give me a loan.
Sure.
That's literally 19th century technology.
Yeah.
On the other hand, I could post a simple wallet address or set up a computer program where the bank could verify every second of the day, 24/7, 365, mark to market the value of the collateral.
Yep.
You're talking about something which is 1 million times more transparent, 1 million times more efficient. So if you want to go back to the 19th century or stay stuck in the 19th century, or in this case, the 20th century, then you ignore this. But I think you ignored at your own peril. I mean, it's pretty clear that the nation is going to find a way to come to terms with technology. I mean, we may put some kind of KYC, AML regulations around it. I mean, we do that with a lot of things, but it is technology, and once you've created it, we're either going to master it and use it for the United States to lead in the 21st century, or we're going to let some other country master it, and we're going to fall behind.
Yeah. Well, I can imagine this, had this been the case with the internet, had we shut it down or not implemented the strategies that essentially the U.S. really was behind in terms of the science behind what DARPA was trying to do when they created, basically what we have now in terms of the internet. So yeah, you're exactly right. You're mentioning loans and kind of this movement toward financial transactions a lot in this interview. Talking about that, there's several companies out there that are riding on the blockchain right now, whether you're looking at companies like BlockFi or someone like Celsius. What are your thoughts on these companies who are leveraging the coins to essentially go out into the market, do transactions in terms of loans, give you loans on the other side? What are your thoughts on those companies and how they might fare?
I think that the success of BlockFi and Celsius is going to draw the other banks into this, and I think it's inevitable that the big banks, the JP Morgan, the Morgan Stanley, they're going to want to enter this space in order to keep their customers. I think there's two dynamics here. One is, if you look at any asset class like automobiles and houses, there are countries where you can't borrow money to buy a car. And there are countries, it used to be in Mexico, you couldn't borrow money to buy a house. Well, that's in that situation, the industry isn't very well developed. At the point that you can start to borrow money and finance the house and the car, demand explodes. And the same is, so on one side, as you can borrow money to own Bitcoin, or you can borrow money against Bitcoin, demand's going to explode. It's going to mature as an asset class. And on the other side, that's going to draw the banks into this because they can't afford to ignore it. But we're still early, right?
Yeah, it is very early.
Like this decade is the decade when we'll see which bank decides to get into it, and which there will be some banks that don't, there'll be some banks that do, that handle the asset class. The ones
Right.
that do are going to grow. The ones that don't are not going to grow.
And there's some arguments out there on the banking system itself that it potentially could be completely replaced with a lot of these new fintech startups. Is there any particular, brick and mortar bank that you see today that could make that digital leap that you would say, hey, I have a little bit of faith in this particular bank?
Look, I think the nimble fintechs, the Square and PayPal are nimble. They're going to kick the less nimble fintechs, the Google, the Apple, to think. And then you've got the nimble banks, the Celsius and the BlockFi, and they're going to tweak the less nimble banks. And, some will get a little bit in, like Morgan Stanley announced they're going to offer a Bitcoin fund through their financial advisors. But that's like just dipping their toe in it. Mm-hmm. Like, it's really anybody's market to have or not have, depending upon how progressive. And I think it's reasonable to say some large traditional institutions will get in, but many will not.
Right.
And some big tech companies will join and others will not.
Sure.
And that's what makes the market competition exciting to watch, right?
No doubt. And I think you're right. There's going to be some big winners here. This is going to kind of explode what I think could be an entirely new evolution of startups around fintech. And I'm getting very excited about them. I've had a chance to kind of break down Celsius and BlockFi both. Even though there are some challenges with that, with FDIC, insurance, and being able to get enough, especially if you're going in with a large amount of money going into these companies, going in that direction. When they get some sort of security blanket in those organizations, I think that definitely explodes the opportunity for them for sure. Because I know a lot of people that are, they're sitting on $1 million in cash. They're just sitting there. Well, I have to put it in different banks right now just to be able to keep it secured. So when you're getting into those kind of scenarios, it definitely plays a part.
Yeah, the banking and the on-ramps do matter. I mean, some people do business with a bank and they've been doing business with the same bank for 30 years.
Yep.
And then when they start thinking about Bitcoin, like, how do I buy it? It takes like 6 months or a year to get comfortable. And then well, how do I borrow against it? And that's like another year of thinking and worrying. So you've got a 1 to 3 year impedance. On the other hand, if JP Morgan or Citigroup just said, oh yeah, we'll buy $1 million of it for you and we'll give you a loan at LIBOR plus 300 basis points.
Yeah.
It would go from taking 3 months of agonizing with 5 people huddled in a room to like 5 minutes on the phone with your broker. And so that is, it is a dynamic and it's occurring right in front of our eyes.